welcome to everyone with us here today for joining us in this presentation on accounts payable fraud and with an emphasis on detection and prevention. Just to give you a quick walkthrough of the agenda for the presentation today, we'll cover, I'm going to start off with a bit of an introduction through statistics to give those of you who may not be intimately familiar with the fraud picture, if you will, a little bit of perspective, just how serious the fraud issue in general is and the fraud in accounts payable problem is in particular. Then we'll jump into a discussion of the main types of AP fraud that organizations of all kinds are experiencing today, and then move directly into the detection and prevention side of the presentation, which starts with a discussion of being able to identify and report red flags of AP fraud schemes, and then detecting the actual frauds themselves, and then ultimately using what we've learned through the identification of actual red flags and actual AP frauds to eliminate weaknesses in our internal control protocols to reduce the risk of accounts payable fraud. We can never, unfortunately, completely protect ourselves against AP fraud or any kind of fraud for that matter. The good news is that there are a number of best practices that have developed through trial and error and research and professional application, if you will, to help us in substantially reducing our risk of being victimized by these scams. So without further delay, let me move us into the statistical discussion that I mentioned. So this is just kind of a sampling of what is actually a pretty significant body of statistical research on fraud. This is a growing area of both professional, commercial, and academic attention to fraud issue that is coupled increasingly with the cyber crime element of it, since many, if not most, cyber crimes have a fraud element inherent in them. So what we've got here is a sort of a selection of kind of the more, what I believe to be perhaps most telling kinds of, or most informative kinds of statistics. The first one tells us, and is derived from research of the Association of Certified Fraud Examiners, which was mentioned in the introduction, tells us that 3.5 trillion, with a T, as in Tom, dollars is lost to fraud globally every year. In other words, the entire global the entire global economic product is shrunk every year by approximately 3.5 trillion, representing approximately 5% of its total to fraud. That's a big number, and you can extrapolate that 5%, as the ACFE does in its own research, which you can follow up on your own if you so desire. You can extrapolate that 5% down to your own individual organization. Now, hopefully your organization does not lose 5% of its gross revenue to fraud. Many organizations don't. They've got internal controls in place. They've got processes in place that do not particularly lend themselves to misconduct and financial misappropriation, and therefore perhaps lose, in the area of 2 to 3 to 4% of their gross revenue to fraud. Then on the other hand, there are a lot of organizations losing 7 to 8 to 9, sometimes double digits amounts of their revenues to fraud. And we'll actually go through one case study where in excess of, 20 to 25% of a company's, not even a large company, gross revenue was being siphoned off by an embezzlement scheme. But moving along for now, the Big Four accounting firm, KPMG, which you're all familiar with, discovered in their research that 75% of companies had experienced at least one incident of fraud in the 12-month period that was studied. That, too, is a slightly disturbing finding in that, first of all, it's probably conservative. A lot of companies won't admit to having been victimized by fraud because they don't want to risk tarnishing their reputations and so forth, and they're demoralizing employees and other sort of unfortunate non-monetary byproducts of fraud. So it's probably safe to assume that 75% is actually more in the area of 80 to 90% of companies. And as I said, no company is completely immune to fraud. So in reality, if we ran this piece of this research again and again, we would probably find increasingly higher percentages of respondents saying that they did experience at least one incident of fraud. Again, from the Association of Certified Fraud Examiners, we learned that the average cost per incident of fraud is $160,000. Now, that may, at first glance, alarm you if you're considering only accounts payable fraud, although I will tell you that there are, and we'll actually see shortly, that there are numerous accounts payable frauds that far exceed $160,000 in losses. But for the purposes of this discussion, just to give you an idea, again, the association monitors and analyzes the patterns of fraud in 80 to close to 90 different types of fraud, of which accounts payable fraud is just one. And others include payroll fraud, accounts receivable fraud, financial statement fraud, and a whole host of others. So you can imagine that across the spectrum of average per incident losses in 80 to 90 different types of fraud, you're going to get a wide variation in the average per incident loss. In the overall, though, for that 80 to 90 different fraud schemes, the average loss is $160,000. And because it's closely related, I'll skip temporarily just down quickly to the last line below there where it says billing fraud costs, victim organizations, an average of $100,000 per incident. And this, again, this is broken down by the ACFE. And billing schemes, we include this statistics here for this presentation primarily because, as you either already know or will shortly learn, billing schemes, of which there are a few varieties, to put it mildly, are one of the most commonly committed forms of accounts payable fraud. So we have a little bit of relief here, at least in terms of the dollar loss amount per incident of billing schemes. And again, billing schemes, don't think that billing schemes are the only form of AP fraud. Obviously, they're not, but they are, as I say, amongst the most commonly committed forms of AP fraud. So there, it is helpful to know that it pays to put into place effective detection and prevention measures to avoid potentially losing $100,000 in an incident of billing scheme fraud. And then finally, and importantly to this presentation, 67% of corporate fraud is committed by insiders. This from Kroll, which is probably the leading international fraud investigation firm around these days. Been around for about 30 years, highly respected. Also does a fair amount of research on fraud. And it is important to note here that 2/3 of the frauds that we're going to be talking about here today in the area of accounts payable are committed. Well, to be precise, are committed at least in part by insiders. We'll see shortly that a lot of AP frauds occur collusively, involving outside vendors as well as other insiders. But the ultimate reality is that 2/3 of all of these frauds are at least initiated or involve somebody with whom we work. So that's a little scary.